Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, the week ahead, we have Tuesday, January 22nd. What are we starting with in terms of volatility? Let's start with equities. If you remember correctly, last week the VIX went to a 5-year low. It just seems like the market has turned from being macro-focused to being micro-focused, looking at earnings, and so far they've been okay. The VIX hit 12.46. Today it's up a little bit, up about a half a point on the day, but volatility is very, very low indeed. Moving on to FX, that's actually the opposite story. FX G7 vols on the rise all week last week. We had, in aggregate, a 1-point move to the upside in FX vols to 8.4%. That's 1-month vol. And in addition, Japanese yen 1-month vol hit a 1-year high last week. Moving on to gold. Gold was down about a 1/4 point last week. It did have some wild moves during the week, ended up at 11.6. Today we're down about a full point in gold volatility. That would be 1 month at the money implied. Oil is a bigger story. Last week, oil plunged 2.1 points to 19.5%. Do keep in mind that oil did have a significant rally over the past 4 weeks and seems like it's stalled out just a little bit back into a tight trading range. Oil vol fell off 2 points last week. Again, that's 1-month vol. What stands out from last week? What would help us? And the first thing you have to look at is that the markets in general seem to be going from being macro-focused to micro